Accounts people, time to have a look at a very thorny issue, one that has caused a number of arguments in class with students who've learnt otherwise. So now we're going to explain why drawings are not an expense. Drawings are not an expense, yes. Yet again, I've come across a group of students who have taught or otherwise learnt that drawings were an expense at level 2. It's an easy way out to explain that drawings are a debit in the trial balance. It works, you will pass your business transactions, you will get your trial balance to balance if you've learnt it that way, but it's very, very wrong. Drawings are the owner taking money or goods out of the business, credit purchases or credit bank debit drawings. What they're actually doing is reversing their own capital. They put the capital in, they're entitled to use it, it's their own money. So let's have a look at the consequences. So from a accounts point of view, here's a sole trader. This sole trader is doing quite well. Good sales revenue, only perhaps one employee on that sort of wages. They're even good at paying their bills. Discounts received, must be paying the bills good. So lots of good items. And in fact, this sole trader makes £20,007 profits a year. So what would actually happen if we treated that as an expense? Well, let's have a look at what should have happened first. Opening capital plus the profit minus drawings equals the closing capital. This is the capital finance by section. It balances off the balance sheet or statement of financial position. But imagine I was wrong. I thought drawings were an expense. Take them from there, of course. Suddenly, instead of making £20,007 and paying tax on that, I think I've only made £5,407 profit. Is it worth being in business? I might even take a wrong decision. And then I'm going to pay tax on the lower amount. So let's have a quick recap or quick think about the consequences. Treating drawings as an expense in the sole trader's statement of profit or loss, it'll understate the profits. We've just seen that happen by £14,600. It may lead to the sole trader taking a decision that's wrong, thinking they've only made, in this case, £5,407 profit. They hadn't. They've made a lot more than that, 4 times that, give or take. They'll then complete the self-assessment return incorrectly. They won't be paying enough tax. They'll be paying tax on £5,407 instead of £20,000. That's a big difference. Ultimately, everybody gets caught sooner or later. It does happen. Has to take that. They got caught years later. Lots of people have got caught years after the event, and they'll get fined, interest charges for late payments on all the amount as of when it should have been paid, and possibly criminal prosecution. So that's for the sole trader. They're not going to be very happy with you as the bookkeeper, and they will most likely sue you for breach of contract if you're self-employed, and then they'll want you to pay them compensation for all the fines and criminal prosecution that they've endured as your fault. And they'll probably report you to your professional body, or the courts will, whether it's ACCA, AAT. They'll take disciplinary action against you, or SEMA will as well. And then if you're employed, slightly different. You will lose all your employer's faith and trust. They thought they'd taken on somebody qualified who knows what they're doing. You've just proved you don't, and you've made a big mistake. They may have spotted it before it goes out, but what they'll then do is put you on capability proceedings, start to get rid of you, basically. And if you carry on doing that, ultimately you could lose your job. So just to recap, drawings are not an expense. They never have been, and they never will. Please learn it properly in the first place.